Yo, 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 how's it going? Welcome. It is Jonathan, and well, you know how it goes. We are waiting for this market to top and drop. Actually, I was going to start on the US markets, but I think we're going to head over to KOSPI. KOSPI is the Korean index. Now, take a look at this. This is a weekly chart now, okay? And I'm going to just walk you through what you see on your chart. The indicators that I now use, I think that the indicators that I now use are fantastic. We have a blend of custom-built indicators, which we have done, built ourselves from our understanding of 3 models. I'm going to walk you through those models. And these models are spectacular for what they do. Now, they're not free. The models that I'm showing you on the chart today are my understanding of these concepts. So they're not one-to-one exact replicas of how these models work. If you want the proprietary code, you will need to pay through Optima or some other platform for these models. However, I have gone in, done a ton of study. I read all the books, read all the YouTube, went through all the YouTube videos, went through all the online forums, etc., on these models, and I then built out my own versions of them. Okay, but the ones that we base our analysis on for price-based action. Okay, so I'm not doing any forecasting today, so this is just price-based action. Is DVAN. So if you want to go take a look at DVAN, you can. Divergence analysis is fantastic. Now, the one that I use is the DVAN long term. And basically, so this is it in Optima. If you have Optima, you can subscribe to it in Optima. Basically, you have a long-term trend blue line, and then you have basically price as it is today. And this gives us an indication on if price is above or below that long-term trend line. Yeah, that's basically it in a nutshell. So if I go back here, green above blue indicates a bullish bias, and green below blue indicates bearish bias. Now, I've actually built this into our new cryptocurrency algorithm. So we actually have a bot that trades on a VPS now. It is a long-term model, which means that we're not day scalping or anything like that. Basically, we're waiting for the long-term DVAN to be bullish, and then we're waiting for go no go to actually also print bullish, plus another few indicators that we have in the background there to chop out the whipsaw motion, etc. But this is one that I love. I did a lot of back testing on it, and it provides fantastic results. And at the moment, historical analysis of the cryptocurrency market through our 2 models, we're able to what we would be looking at, because we're only live now, this is only back testing results. We are looking at a 50% compounded annual growth rate. Okay, so that's basically adding 50% portfolio growth to your total net wealth every single year on autopilot. I should reiterate that what a compounded annual growth rate is. Basically, our model doesn't trade short, so it's a long only model. And if the green line, or if the green trend, I should say, is below the blue line, basically we're not making any trades. So there's going to be lots of time periods, especially in bear markets, where we're actually out of the market. Okay, so it's a long only model, out of the market in bear trends. And in bull markets, we're able to then produce, 100, 200% per annum. But because we're not trading short, our compounded annual growth rate, when we consider all the short years, averages out to around 50% a year. So if Bitcoin basically went to 0, our model wouldn't trade it down lower. That's one of the models that we built in. Okay, so we only go long, and we only want to be in when everything is aligning up bullish. The next thing we use is DVAN short-term cycles. And it's basically an oscillator, but we have an oscillator as in like moving up and down. But let's take a look. So green histogram indicates positive short-term trend. So if we open up this, you can see we have green and we have short-term trend is positive. Red indicates negative short-term trend. So we take a look, we can see red in here. It indicates negative short-term trend. It doesn't indicate or doesn't tell you that price is going to go down. Sometimes, more often than not, price is basically trading sideways. So momentum is declining. And then we go back into the green, so positive, and then we go to the red and then the green, etc. Then the leading blue line shows the leading force and indicates more prominent short-term changes when crossing 0. So basically, if it crosses 0 to the downside, we're bearish, and if it crosses 0 to the upside, we're bullish. So you really want those 2 models to line up. Okay, so basically, if we look at this, and we were to highlight this point in here, so it's green and then it crosses above zero, that would be your bullish force intact. Once it kicks below zero, if you're a long only model, you wouldn't be in the market. It's above zero and it's green, you'd be in. Red, you might sit out. Green, you'd be in. Red, you might sit out, and then it goes below zero. So there's a lot of ways to actually use these sort of indicators. And, that was just a hypothetical example. The other one we use is Go No Go. I've been using Go No Go for several years, and it's now included for free for anyone who has Optima subscription. Okay, so it's fantastic. You're able to get this for free. Basically, what it does is it prints on your chart, go and no go, and it's based on 4 to 5 indicators. Can't quite remember the exact number, but there's a whole bunch of oscillators and indicators, which when they are all bullish, it turns go. When they're all bearish, they turn no go. And there's the orange one. It's called go fishing. Basically, when they're doing nothing, okay, or they're basically hovering around 0 points. There's no real trend. So that is another one that I would recommend, that if you have Optima, put it on your chart. It's free. Okay. So just search Go No Go in Optima. It's there. It's free. It's fantastic, I reckon. And it's going to help you gauge the trend. Okay. So you can see a lot of this purple on gold, and this was around 2023, 2022 into 2023, it was purple. Okay. We had a light greenish tint here on go. You can see that the dark blue is really the go-go zone. And so it went from orange to go. It was a light green, and then it went to orange again, and then back to no-go. So that was indicating still structural weakness. Then we went go, strong. Okay. Then we went dark blue. Then we went light greenish blue. Then we went dark, and then it just all the way up into the end of that trend. It's fantastic to follow price using this. So that's another one we use in this, ones that you'll be seeing as we progress on. Trend identification is arguably the most important concept in technical analysis. By blending objective, widely proven statistical indicators together with the foundational principles of technical analysis, Go No Go trend colors and price action. Colors the price action of any security according to the strength of its trend. Okay, this can happen at the start of the new trend or after bright blue bars indicating that the trends may be weakening. Okay, so the bright blue bars, okay, indicates the maybe strength may be weakening. The amber bars represents uncertainty. So what I have found is that you don't want to be entering a trend basically after the orange bars. Often the time the trend isn't over yet. So you wouldn't go orange to go and then get in. You would basically wait for the trend to really confirm itself. All right, so that's that one. And the final one is volatility-based support and resistance. So I'm just walking you through all the tools that I'm going to be showing you, and they're going to be 4 of them. And I have built my own. If you want the proprietary models of these, you will need to subscribe to them. But my understanding of these models, I have built basically my own version of them. And I think it's fantastic. Okay, so basically we have support and resistance 1, 2, 3, and 4, so that's if we're using the zones specifically, or we have 8 tops and bottoms basically, okay? And these are support and resistance zones. And what happens is as price comes into, so we have a band that goes up and down, and as it makes transitional points, okay, so this one right here, you can see this high and low that I'm hovering over, as it comes out, so it basically zooms out into the future, a band, and when it does that, oftentimes that is providing a support and resistance zone out into the future. So it is basically forecasting support and resistance without having to do Fibonacci, etc. I think it's fantastic. It's got nothing to do with Fibonacci. Okay, it's volatility based. So that's what we're looking at. Now, let's take a look at KOSPI because everyone's wondering what is going on. We're going to take a look at the DVAN long term and the DVAN short term. You can see the DVAN short term right now is below zero, so it is bearish, yes, on the weekly. And let's take a look at the DVAN long term because this is where I'm going to turn off the short term. This is where we really want to get an understanding of what price action is really doing to the chart. Okay, so you can see here we have DVAN long term below the moving average. Okay, this is this blue line. You can just consider that as a moving average. So price is below that moving average. And you can also see the go, no go is also indicating that this is not a bullish period. Once it moves above that and you get a go, that generally signals strength, okay? And as long as it stays above this zone and we have the moving average pointing up, it is generally a strength zone, okay? So you would have basically bought in 2020 and sold in 2021. You see how that works now? And then it transitioned under that moving average, okay? And this is a weekly chart, by the way. So this is a long-term trend. It's not the short-term stuff. And we also transitioned to a no-go. And you can see that that no-go and the DVAN long-term actually coincided with a long-term bearish trend from 2021 down to 2023, okay? You can see that zone right in here. And then we move on a bit. Let's go ahead and get rid of that large data. Now we can see, so this is where you need to be objective, that moving average is slightly sideways, okay? So it's not progressively higher, it's not progressively lower. It is sideways, and price is also oscillating above and below it. So this is a really choppy area, and you'll need to use an ADX filter or some sort of volatility momentum filter to really filter out when you want to be bullish or bearish and you want to be taking these go no-go zones. Go no-go will really chew you up in a sideways trend, okay? Because you're getting in. So let's just say you got in on this bar, you got out on this bar, you got in on this bar, you got out on this bar, and it just really chop you in, chop you out, chop in, chop out, and it's really hard to deal with. So you want to add a volatility filter when you're doing any of these. Basically, if volatility is low or we're in a defined sideways trend, and that's why you also want to do your technical analysis, you don't want to be trading go no-go in a sideways market. So always use multiple indicators where possible. And then we moved into this long-term uptrend. You can see the slope didn't actually start turning up until around this zone. It's really hard to see because price action here, but it kind of goes sideways and then starts to slope up. And also price is way above that zone. So this whole time period here where it said go just after, so maybe a couple of weeks after we moved above that long-term trend, we would have been in a bull market from $2,000 and we would have remained in it into the top here, which I can't see, into around $9,500. It has dropped and it is slowly, I shouldn't say fast approaching, slowly approaching that long-term trend. I think on a weekly basis, yes, price is down a lot. Yes, I understand that. But on a weekly basis, until this transitions below, we cannot define a bear market just yet. Remember, bear markets are really well defined when they are below this long-term trend, okay? We go back further. Let's take a look at this. I'll reset the chart. 2014, let's go back to 2008. So we have this really long-term uptrend here. Bit of congestion at this point. Really long-term uptrend. And let's just say, hypothetically, that we are at this point right here at $2,080, okay? So markets come up, and then it started to trend lower until it really breaks this zone, okay? So this upward trend, and then stays below it and doesn't get above it. Okay, so this is all printing no-go. Then we haven't really, or we can't really define the end of the bull market. Okay, so we want to get those oscillate. Yes, we can do forecasting. Again, I told you this is not a forecasting one. I'm just showing you the indicators that we're using now. So you get a broad understanding, sorry, of basically how to analyze the markets from our price-based perspectives now. Okay, so boom, all the way down into 2009. And in April 2009, we printed go. And we also moved above that oscillator. Okay, so you can see how it's going to keep you out of the market when the market's moving down. It's going to get you in when the market starts moving up. Again, you got to trust the model. For a lot of people, you would not be buying. Okay, so I'm going to draw this out. You would not be buying. Well, that's a black one. While this is still pointing down. Okay, you would then probably wait for it to point up. Once it's pointing up, so this transition here, you would then be looking to go long. Okay, so price above it, and the moving average is pointing up. So keep that in mind when you go to analyze the markets from this perspective, that you're going to get whipsawed in and out if price goes above it, but the indicator still points down. You'll figure that out for yourself. And this whole long-term sideways trend actually lasted several years before it took off again. But yeah, you get the idea. So what am I trying to get at, and why am I showing you this? Well, basically, Yes, the market's down around 20-30%. Not looking too good, but still in a safe zone. But let's take a look at the daily. Is there any indication early on where, well, we should have sold? Okay. Now, my basis would be that in here we would have gotten a no-go. In this zone, we would have gotten a no-go, plus also goes. And I reckon maybe around here, we also would have printed a no-go. Okay, so oscillators moved down from this perspective. All right, so we're switching to daily, and the indicators are now going to change. And straight on cue, and in this zone here, we did print a no-go. So if you were using this on a daily chart, and you can also see down here, let's pull this up a bit. We also printed below the average here, okay? You can see where the goes really line up with the indicators going up, and they also line up with the indicators going down. So it's a fantastic confluence tool that I like to use for price-based momentum, and something that I am definitely sharing with you guys. Okay, so remove all drawings. So basically, this is a no-go zone from a daily perspective. From a weekly, we know eventually if this market keeps falling, it's going to turn into a no-go. Okay, basically it's going to turn bearish. But from a weekly perspective, we still got to wait for those confirmations. Okay, we get under that long-term moving average, and also we get a no-go, just printing no-go for continuously. And then once price moves below that long-term moving average, then we can be decisively bearish. Okay, we wait for that. Monthly perspective, you can see we printed go also around 2025, rode the price right up. This slope is so slow moving, price is going to fall so hard before it gets back here. So I wouldn't worry about that monthly perspective. As for really long-term trends, but I think it's too much of a long-term trend to be worrying about at the moment. So stick to the short-term ones. Now we're going to head to the daily, maybe the weekly. We'll see, daily or weekly. I'm going to swap out this indicator. I'm going to turn on this one. All right, so this is our volatility-based support and resistance. Now it's only printing the recent ones, but what it is going to tell us, and again, the same method applies. So each of these major turns are going to coincide with support and resistance. So you can pull this out, for example, and find support and resistance. But the most recent ones, we actually had the lower support and resistance all the way out here. So price is likely to provide some sort of support and resistance around that 4.5. This resistance zone from the past as well also comes out to where price is now. So whether price rebounds off here or not is yet to be seen. But as price moved down and into this zone, it was rejected as resistance to the upside. So no real clear directional bias on this tool right now. So we'll have to keep waiting. But that is that one right there. Let's head over to our standard market. Okay, so what we can see here is we can actually see that price is itching below the long-term moving average. It's itching below it. Interesting. Let's go ahead and get rid of this volatility-based indicator right now and go ahead and pop on our go, no-go. Again, there's lots of go, no-goes and volatility-based indicators on TradingView already. You can go ahead and do that. Let's go ahead and turn off what we don't need. Again, this is all custom built. I went in and got an understanding. It's not the proprietary model, but it's what I have built. And I recommend just using Optima. Let's go ahead and reset the charts. Can you reset this one? Maybe not. Anyway, we're currently printing no-go on the SPX. We are expecting that because we are below the long-term moving average. From a weekly perspective, though, we're still in a go. And from a price perspective, we are still way above that zone. If we go back to 2007, because that's what we're comparing our current time period to, we want to see that price really stretch below early on. Okay, we want price to really come close to that long-term average and not so far away from it. So it's got to sort of cluster around it and then drop below it. Once we get that drop below it, okay, go ahead and mark it right here. You can see that price then will keep us out, or these indicators will keep us out until we get these lining up again. Okay. Let's go back even further. This is 2000. You can see no go. You can see price kept you out. Okay. So you can see right here, this is what I'm talking about. You get a go within a long-term no-go, but our indicator told us that the bias of this go is not that great because it's occurring inside a long-term downtrend. So we really want to get both of these momentums teeing up. Okay. They really want to be on the same wavelength there. Let's go back again to 1987 as an example. Okay. So price dipped below it here on October 12th. Okay. So right in here, stayed below it. Wouldn't have gotten you out early in time on this one, unfortunately, but would have helped you get back in pretty early on. Keep clicking the wrong button. Let's go back again. We can go back to 70s here because this is where a lot of this whipsaw motion occurred. Okay, we get the no-go, we get our trend, we get our go, we get our trend, and then the major ones over here, we get our no-go, we get our trend, we get our go, we get our trend. And that is what I'm trying to get at. You see the beauty of these two models put together. Keeps you out when you want to be out and gets you in when you want to be in. All right, obviously that's historical information. We can't do anything with that, but I'm just trying to show you our price-based models. Let's go to the future now. So this is 1 week, and the ASX, like I have been saying, is not doing from a technical analysis perspective. Okay, so we're not talking about indicators right now, but from a technical analysis perspective, I was slightly bearish. I'll admit I was slightly bearish, but everything is pointing bullish. We're a go on the weekly. Okay, so on the weekly, we are a go. And long term, still bullish. Heading to the 1 day, bullish, bullish, bullish. Go, go, go. We're still above that long term. The oscillator is trading sideways. That is not a good sign overall. Momentum is weakening. We know momentum has been weakening because we can see that price has basically been trading sideways, okay? I'm not really good at this trading view stuff, but you'll get the idea as we keep drawing. But we're now above this zone, clearly above it. Let's go ahead and actually do some other stuff. Let me pause it. All right, so I just paused it because I didn't want you to see me fumbling around with trading view. But what I have done is I've just placed on two Fibonacci extensions. So we got one extension which starts from here, goes up to here, and then is projected from this low. Okay. And this gives us basically, what I will do is actually get rid of the ones that have already passed. You can see if I turn on 618 price is already above it. 786 price is at it now. But basically what I've got here is a zone where price can move to based on that prior extension. Okay, so this one here goes up and then down and then price rallies higher. And that gives us a zone to be watching, generally 100%. Okay, so we'll be watching that 100% zone and 1.618, these two right here. So price can actually come above this March high at 9246, sorry. And if it then progresses above that March high, then we'll be looking at 9716. First order of resistance is obviously this one right here, spike above here. You know, take out the stop losses or the stops or trigger the buy orders on the upside. And then the second one I was trying to see if there was any form of extension coming from this one here. Okay, and that's very important, is we want to get price clustering. And if we do a price cluster based on this low to this high to this low, then we also get price clustering or an extension, I should say, at 9185. And 9185 also coincides with this top. So we actually have a bit of a cluster within less than 100 points in this zone here. So if price does come up, that would be the first order of resistance to the up move. So we'll keep that in mind and we'll keep watching as price moves on. But at the moment, the XJO, which is the Aussie market, is printing bullish bias. And it's actually doing the opposite to the US. A lot of the times, what's been happening in the US hasn't really impacted Australia. We got knocked down just as the US did and didn't recover really, but we are now recovering when the US is falling. But as the US rose rapidly, which is kind of cyclical, might I add, the Aussie market actually traded sideways for a very long time. So we'll keep that in mind. Let's go ahead and get rid of the indicators. Let's go ahead and pop on our volatility-based indicator. And interestingly enough, okay, let's go take a look at this. So the old support and resistance zone came in and triggered right here. So you can see just how these old volatility zones trigger price. Interesting. The most recent one that we're looking at, okay, golly gosh, is this one right here. And it also comes in at around that fib zone, which is the zone that we were just looking at from the fib ratios, right into this old top. So there is a chance, not a guarantee, there is a chance that momentum will fade at this point. And if we get an E, which is an exhaustion tag, basically based on this volatility index, if we get an E, that's going to tell us that price has exhausted its move, either up or down, and is likely to reverse. So if it comes up into this zone, prints an E, then we may be looking for that bearish turn to occur. If price does keep pushing up, then the next zones, so this is a double up here, next zones would be 9232 to 9331. That's just what I'm looking at based on this curve here, and then all the way up the top at the 95 zone. Alrighty, get rid of that one, get rid of all the drawings. That is what we're looking at. I don't know if I have anything else to share with you. We won't do mass pressure charts or anything. Let's head on now to the DAX. DAX made its sell-off, made its rally. It actually gapped up on that rally, so a lot of markets are moving right now. Let's take a look at DVAN. And we'll get rid of everything else that we don't need. I will actually get rid of the short term. DAX, just like the Aussie market, sold off after March, traded basically sideways, did move up higher than the Aussie market, so it actually breached its old highs, sold off, and then is rallying just like the Aussie markets, and has been trending higher on the long term. From a weekly perspective, we are still above that long-term momentum. Okay, so everything's still pointing higher. Until everything changes, and there's got to be a catalyst. We don't know where that catalyst comes from, whether it's the Asian market or whatnot. There is still no reason to be bearish. So that's based on that. We haven't done divergences or anything, but just based, and I'm trying to keep it real simple by showing these indicators and how to analyze them and how to look at them. But everything at the moment is still pointing up. So we maintain a predominantly bullish bias, but we're cautiously bearish, if that makes sense. So we know that the end is near. Whether it is in 2027, 2028, markets will progress, but we scale out and we don't go loading in. What do I mean by don't go loading in? If your nana dies and she gives you $500,000, now's not the time to drop $500,000 into the market. You might just drop 20 grand. You might just drop 50 grand. We are in a position where we're looking to scale out and not go in. You'll know when you should be going in because we get these large sell-offs. Okay, we get these large long-term sell-offs that last, a year or two, and then all the indicators start to point up. So if your nan died here, you'd be waiting for everything to line up. You don't want to be counter-cyclical. You go back to all these time periods where price showed us that now is not a good time to be in. Then once it triggers that go zone, and once it triggers that bullish zone, then that is a time to take your grand's money and dump it in the market. But we're already up here. Okay, time has progressed a lot. We're now itching towards this potentially bearish zone where we're not exactly far away from that long-term trend. We're still printing go. We're still printing bullish, but we're in it just in case we're wrong. We still want to take money off the market, but we're not going all in. We don't want to lose our shirts. I'm not sure if that's helped anyone out there, just to get an understanding of these models if you ever looked at them or weren't too sure how to use them. These are the models that I use at the International School of Forecasting. And like I said, after a couple of months of reading all the books, reading all the forums and whatnot, I did code them into TradingView so that I could use them for personal use. But I do recommend that if you want to get the actual ones, because I can't guarantee that my ones are going to be as good or even correct according to the original ones, go ahead and just join up to Optima and get them. I think they're fantastic. Again, if you're on Optima, you get Go No Go for free. That's one that's included already. Fantastic tools and something that everyone should have in their trading arsenal.